Welcome to another episode of Heartland Market Talk on the Open Range. Well, in the headlines, oil prices have been on the decline as of recently. Economic woes have been part of the problem as we're building about 1 million barrels per day around the world on lack of usage, mostly from China. We're seeing this. Along with the U.S., there's been some less usage we're seeing. But of course, countering this now is the crude oil market is getting concerned again that there is no truce between Hamas and Israel has now started to dial up the action again. And so oil prices are taking a break on their decline, pretty much stabilizing in this $78 to $79 barrel range for the moment. Natural gas, on the other hand, has been on the uptick. We're at a 14-week high now, up 3% as of late, as demand has increased here for natural gas needs, along with energy, electrical use. We're seeing more electrical generation in the Southwest, and their demand is increasing as of late. And so natural gas prices are breaking out from a very dormant pricing period here over the past several months. Now, the wheat trade, it's been exciting, moving higher on prices as of late, even when rain has arrived in some of the driest areas of Kansas, as the Russian wheat dryness in southwest Russia it continues to be a growing concern as the world wheat values of the last 2 years have had their downward pressure come from Russia with oversupplies that they're just dumping on the marketplace. Well, if the wheat market does not experience some change in weather conditions over the next few weeks, some improving rains, we're seeing a drop of probably some 10 plus million metric tons of wheat production out of Russia, which will help lift wheat prices probably even further. Also of note, in the coming days, there is some freeze scare warnings in the northern areas of Russia where they have winter wheat growing that could be at risk. It's not just a one-night event. Looks like it's a couple of night events, and so that's had a strong support value to wheat as of late. Now, talking of crops, Argentina continues to struggle with their leafhoppers disease spreading, the stunt disease, lowering their production for corn considerably, causing even our corn values in the U.S. to see added incentive pricing for premiums. That we're going to probably see a better corn export market coming up in June and July than we normally anticipate, as the exports out of corn for Argentina will be slow to develop. And then also, suspicious fry oil has been entering the U.S. from China. This is taking advantage of our incentives for the renewables that we're paying. It's been designed for the U.S. farmers, but there was no criteria that says it was U.S. farmers alone. So we're seeing China, who won't buy our soybeans, exporting fry oil from their country into our country, competing with our crush, with our bean oil supplies that we're developing with these new crushing plants coming up online across the country. In the U.S. grain trade, we have seen, of course, this price spike now into the second quarter. It's not uncommon to see old crop corn and beans rally into May. Some years we can hold these rallies out until the early part of June. So we're seeing a lot of heavy farmer selling showing up in this current rally, which is, of course, just good marketing if you missed last year's big price rise. But the prospects for further strength can come from this Friday's WASDE crop report. In the morning, CONAB out of Brazil will be out with their data, and it's anticipated they're going to lower their corn and soybean yields again. So now, what extent will the USDA come down? Estimates are for them to come off 2 to 3 million metric tons from their holding out last month, holding the production values high. But at some point in time, they have to start to rectify their differences between them and Brazil. In the last 20 years, when it has mattered, because prior to 2000, Brazil was not a big player in the bean market, there has been 10 times we have seen a large difference between CONAB and the USDA. Who has been more accurate? CONAB, Brazil. 70% of the time, we've had to see USDA lower their expectations of yield. So prospects of rally still are out there. So now it's time to go into Heartland Insights. Well, let's get a look at crude oil. They have been in a large decline here over the past month and a half, but note the trend line support that we've been beating on here for a couple of days. We did hold into the close. It's imperative to maintain this upward momentum into the summer months, which usually peaks mostly in June. We've seen highs come in the crude oil market. Now, whether we had a high in April, that could be yet to be known if we don't see any Middle Eastern unrest that causes oil to be curtailed for production of any areas in those Middle Eastern countries. And so oil probably due for a bounce in here. Whether it's a substantial move will have to change the economic development that China starts wanting more oil, or something starts going wrong in the Middle East again. Gold, as you know, has broken its upward momentum, making that high near the 2,450 range. We've been correcting, made a new low late last week on Friday on the employment data number. Now we've been bouncing for a few sessions, not uncommon, but it seems like when you get in these downtrends, every time we bounce, it's a lower high, lower high. So we'll see if the gold maybe is still in this corrective mode. We know around the 10th of the month, there's an interesting point where gold likes to turn. Well, Friday's the 10th, so we'll see if we're drifting in the 10th and maybe turn back up again. Meanwhile, the U.S. dollar strengthening since Friday's employment number, rallying here as well with the gold. Anticipated that the dollar trade wants to hold up for a while as interest rate cuts, if they occur, will not occur until around election time. Now, the grain rallies. We discussed back in March when we had this V bottom in corn. We said that was significant, that something larger was at play here. We had broken the downtrend lines on this trade, and we said there was further strength to come. Well, we've seen it now. Note that resistance is back to where this trade got going at the beginning of the year. Sometimes those are significant, but with the WASDE crop report coming this Friday, we'll see more potential upward movement can be materialized if we can get the real truth out on the Argentine production, what's going on down there. And of course, as we go to soybeans, what is the Brazilian outlook? And of course, the same thing can be said for these beans. A little deeper on the correction, but we are still climbing here, and it looks good for more movement to maybe near $13 on these beans. Wheat, again, big movement here to the upside. Kansas City wheat, look at the moves all the way back to where they were back in December. Note that if we look at the long-term chart, still you can just see all this resistance just above the $7 mark that Kansas City wheat may struggle from. Same thing goes with Minneapolis wheat. Another 20 cents up, you're going to get into some very important resistance points on these charts. Now it's time for Question of the Day, where we encourage you viewers to mail us questions into info@heartlandinvest.com. We were asked, in the commodity trading, there is a delivery period where we try to have speculators to avoid going in that. It's mostly for the commercial trade, the grain dealers, and large corporate interests. Well, there's it called physical delivery or cash delivery. And so with that, what are the differences? Well, in the physical delivery, you actually get involved with taking receipts of cattle for delivery or taking actual grain from an elevator the receipt is designed for. But when it comes to cash delivery, it means a speculator can stay right to the last day, because in the end, what they do is they take the indexing, like feeder cattle, for example. Every day, it's called the cash feeder index, and that's an average of all the sale barns around the country. What are the feeder cattle selling for? So at the end of that contract, a speculator could be on cash delivery and be in for that last day as the contract does settle out where all the livestock barns have reported for the feeder indexing. That is the difference between physical and cash delivery. Remember, you can always call us at 701-222-0221 or visit us online at heartlandinvest.com. While you're there, don't forget to check out our Heartland Market Talk podcast and sign up for our daily newsletter. And for producers, remember, we offer crop and LRP insurance as well. Thank you for watching us for this episode of Heartland Market Talk on the Open Range.